Don't put your yield at risk. Put your trust in proven solutions. Anvil Nitrogen Stabilizer, Super U Premium Fertilizer, and Tribune Nitrogen Stabilizer from Koch Agronomic Services. These products offer higher active ingredient concentrations imitator brands can't match. See the difference at defendyourn.ca.
Let's talk grain logistics. Who doesn't love chatting about that? Joining us right now is David Przednowek from CN Rail. David, it's great to chat with you again.
Good afternoon. Good to see you again.
Yeah, okay. So I looked at some of the railway performance numbers that the Ag Transport Coalition puts out. Wanted to have a chat with you and get the railways perspective on how has this grain movement season been progressing. Some of the numbers look a little bit probably less than ideal what you'd like to see.
Yeah, it goes without saying that for folks like you and me who are out on the prairies and lived through February 2025, it was a miserable February. If you take a look at the intensity of the cold we've had this winter, going back to starting a little early in November and then going to February 20th, the frequency of minus 25 or colder days that we've seen from Westman, so say Brandon out to Lloydminster, the frequency of that intense cold is somewhere between the winter of 3 years ago, 21-22, which was pretty bad, and 2013-14. And 2013-14, everybody still remembers that. So
Yeah.
that kind of intensity of cold is hard on all aspects of the supply chain, including railway operations. February was really the toughest from February 2nd through the 19th. CN, as a matter of maintaining safe train operations and per Transport Canada regulations, when you hit ambient trackside temperatures of minus 25 or colder, you need to shorten train lengths to maintain those safe operations. And there was no let up in that period. Again, 3 weeks, we had a lot of minus 40 nights on the prairies, especially in Saskatchewan. That was really ground zero for it. And during that period of time, CN implemented its train length restrictions. We didn't have a let up in that stretch of winter, so it's not like you had a couple of bad nights and then it warms up so you can catch back up. So it was just day after day after day after day of that. And that most certainly impacted our operations and the operations of our customers. We saw grain elevator deliveries in that grain shipment week 27 to 29 period, which was the first 3 weeks of February, drop off by about 35% compared to where they were. Grain was still moving into the primary elevator system, but just like minus 40 is hard on locomotives and people, it's hard on getting trucks started and augers started.
Yeah.
And we did see a drop in our performance in February. When we take a look at the grain plan, because I know there's a lot of references made about the grain plan and
Yep.
whether Canada's railways are performing per the grain plan, CN's guidance during winter, when we don't have Thunder Bay as an outlet available for grain movement, which takes a big, big bite out of the grain supply chain, but also remembering that winter's winter, and of course, no two winters are alike. Assuming that everything lines up in a given week, that's to say you have good operating conditions, no major mainline disruptions, no labor disruptions. Our guidance to the industry in front of this harvest was to move 595,000 metric tons of grain per week. In December, we moved 595 on average rate on the nose. In January, it was 602. February, we averaged 504,000 tons, and the low point for that was week 29 when it was the third of those 3 consecutive weeks. We've subsequently rebounded. We averaged about 636,000 tons in March and set a record by a whisker for grain movement in March, but our order fulfillment was not at all where we wanted it to be in the month of February, given how miserable that cold was and how it impacted all aspects of the supply chain, including CN's performance.
Okay, so just explain that record movement, but not meeting the order fulfillment is what close that gap for us. What's happening?
Yeah, absolutely. So when CN measures order fulfillment, we start the week and we take a look at what size of grain, what size of car program, that's to say the number of orders that we can accept based on what's going on in the supply chain in a given week. What size of program do we think we can deliver? So what happens is that we get all the orders for CN supplied equipment on Tuesday. We have a sense on Tuesday of what's going on and what's happening in the supply chain that's going to either hinder or help overall movement of grain and other commodities. And by the time we get to Friday, We finalize our grain car order program based on what we think the supply chain can handle for that upcoming week. When the orders come in on Tuesday, there's no limit to the number of orders that come in. The demand is the demand, right? And you think about the fact that in February we weren't able to keep up with demand and that the weather was so miserable. So therefore, when the industry measures its car order fulfillment, the orders that were placed in the want week and whether those orders were supplied, there's no top end to the denominator. You know, it could be 7,000 cars. Like there's no way at that time of year you're going to get that type of order fulfillment. Thunder Bay's closed and the like.
Not correlated at all to what's possible. Like it's a detached number from the reality.
It can be depending on how strong the demand for grain movement is. And when you get through for each week that's minus 35, minus 40, the overall situation compounds itself, and then you have pent up demand, so that you'd expect that number is going to be up there, right? And it also depends on what's going on in the market. But the capacity isn't infinite, and we understand that. Everybody understands that, but it's a simple measure. Here's the total number of car orders that were placed, regardless of whether the supply chain could handle them and were they fulfilled or not. When we measure, we say, okay, we're going to take the program that we finalized on the Friday, the orders that we were able to accept and plan based on what we knew at that time around what we thought the supply chain would handle, and what was our order fulfillment like. And we measure in two ways. One, for the orders that we accepted and planned, not against the roof of the orders, because there could be a difference versus what we received for orders and what we accepted and planned. For those orders that were accepted and planned, what percentage of them were supplied in the want week requested? And two, if they weren't supplied in the want week requested, were they supplied within 1 to 3 days of the end of the want week? So that's to say, okay, if I spotted them on a Monday versus a Sunday, okay, it wasn't supplied in the week requested, but I caught them up. Yeah. So in that period of time, thinking about, the month of February and March, our level of order fulfillment for the orders that were accepted and planned was around 70% for the want week requested. And that's not going to line up with the industry reporting for the reasons that we just talked about. And then for the orders that were either spotted in the week requested or within 1 to 3 days of the want week, the end of that week, it's in the 90s in terms of fulfillment. Look, don't get me wrong. The numbers are not where anybody wants them to be. We went through a miserable February. Did we want to achieve that kind of level of performance? No. Did our network recover quickly in terms of getting our network velocity back? That's to say the average number of miles that a car travels on a given day? Yes. From February 20th into early March, we recovered our velocity back to where we wanted it to be prior to when we had the February miserable weather. Have we sustained that? Have we sustained that velocity through the month of March? Yes. Did we have a big March? Yes. Do we still have a lot of demand to catch up on? Absolutely, because of the weather that we experienced in February. So I think that the level of demand is going to sustain here right through the month of April. Stocks in the primary elevator system around 4.7 million tons. There's a lot of grain that wants to get out of position there and get on rails. We're going to have road bans shortly, and we're going to see the volume of deliveries drop off. But to make it really clear, all that considered, even with February being what it was, our grain volumes are still 11% ahead of last year's crop year to date, and we're on the second fastest pace on record, the fastest being the 2020-21 crop year. So, we have been able to move a hell of a lot of grain this year. We've most certainly had some bumps, and it's not been what we wanted, especially in the month of February. But we got back on the road here and had a big March, and we need to do that again in April to get caught up.
Yeah, appreciate those numbers. Got to ask you, I think a lot of our audience is wondering how all the talk, some of the trade issues, all the talk about tariffs and how that is impacted. Obviously, we're talking about grain movement here, but the railway's moving a lot of autos and a lot of other stuff, and steel and aluminum as well. How are you working? What does it look like right now as you try to work through this?
Well, I guess it really depends on the day of the week, because as you and I would both agree, this has been a very volatile situation. I think the inference here is really think about the tariffs and the potential retaliatory tariffs going across the border to the United States. We also, of course, a couple of weeks ago had the announcement on the 100% canola meal and canola oil and pea tariffs that were implemented by China. That made for an interesting weekend in terms of trying to move the puzzle pieces around on the board. But what I can say is a couple of things. One, that Some rail traffic segments more than others have tried to front load to anticipate what might happen. Might not happen, but not taking any chances. So that's had an impact on cross-border flows again for some commodities more than others. Two, we're staying as close as we can to customers to understand how those changes in flows are going to manifest themselves. For example, are we going to see more east-west flow here? And what does that look like? Or are we going to see the industry adjust, say, for example, in the case of the pace of canola crush? All those things are really important to anticipate and understand what the demand levels are, because it's all about corridor capacity. You got to understand the east flow, the west flow, north, south, and then thinking long term about how that may have impacts down the road here as we get into the summer and in a new crop. And that's going to be a whole other ball game. So we're trying to stay as close to it as we can, staying very close with our customers, and just keeping our eyeballs glued to the news to see any potential changes, because goodness knows there's been a lot of them.
Well, I know you're following Real Agriculture very closely for all those updates.
I am.
I know that. You know, it's what we got to go. We got to wrap up here, but it's fascinating because you also have to think. You have to think ahead, project into the future in terms of what infrastructure is required, east, west, north, south. Like that, you just don't all of a sudden put in more track or more sidings tomorrow because of some sort of thing that changed in the news. That's the kind of real challenge I see for a business like yours.
It
Is
is
that
long
correct?
lead times.
Okay, yeah.
Two quick examples.
Yep.
You can't just take a bunch of locomotives off a shelf at Walmart and put them into your network. You know, you have long lead times with respect to asset acquisition, maybe 12 to 18 months for locomotives. But from the time you get a person recruited, trained, and familiarized in the territory that they're going to be in, you're talking 9 months. Making big infrastructure investments, which includes environmental considerations and permitting, you're talking about years. So we do a lot of long-term planning. When there are wild shocks up and down, you're absolutely right, Sean. You cannot just turn on a dime and then flip a switch and think we're just going to boost a whole bunch more volume into a corridor potentially that can't handle it. So as a nation, it's going to be really important. We focus a lot on corridor balance in our grain plan. You can't just shove it all into one particular corridor. To weather this storm, it's going to be important that all export corridors get utilized, including our eastern supply chain. That's going to be very important from a corridor balance perspective as we move forward.
Great stuff. David, really appreciate you joining us here today.
Very good. Thank you. Have a good rest of the day.